Mike, a lot of people are believing in this yield curve steepening story, higher, longer term yields, based on this idea that we will get some sort of fiscal support bill, perhaps this year, definitely next year. How high can 10-year yields really rise before the Fed steps in?
We think this is a huge issue. And I would say our view on it is perhaps a little distinct. I mean, I think we heard from Governor Brainerd yesterday that the Fed intends to act along the entire yield curve. We see that as a signal of exactly that the Fed is going to be pretty closely watching the nominal curve and not allowing a tremendous amount of steepening. To us, the kind of more compelling reflation dynamic is to expect to see the nominal curve stay more or less stable to a little higher, but real rates tips to rally even more considerably. So real rates even more negative, and that has pretty important implications for the dollar, for risk assets globally. So we think that's the really important dynamic here.
Well, Mike, that makes it profoundly difficult to own financials, and it makes it even easier to stick with what's working right now. What do you say back to the people that are talking up the rotation in the equity market in America?
So I'd say two things. And I think we have been talking about a type of rotation in the market, but it's been less growth to value and more large to small. We do think that the growth dynamics that a reflationary fiscal stimulus type path could put in could bring about that type of rotation. But agree with you that, you know, in a world where we see real rates lower, when we see the path of the dollar potentially lower as well, that's also a pretty attractive world for equities outside of the United States, risk assets outside of the United States, including places like emerging markets.
So I'm looking right now, the low of negative real yields for 10-year treasuries. In other words, the amount of money you're losing to invest in longer-term treasuries based on the rate of inflation hit a record negative 0.11% in September. How low could this go?
Well, I don't want to put any precise numbers on it, but I do think the important point is if you look at places that have combined kind of significant ongoing monetary accommodation plus fiscal policy, that the place where that has really manifested itself is in real rates. I mean, this is what we saw in Japan. This is what we've seen in other places that have brought this combination to bear. And I think that's where we see the pressure from those two forces coming together in policy really manifesting itself in markets.